Welcome aboard. Glad to have you here. We're going to talk about fear and greed in the markets. And before I do, I just want to mention that you can get into the free class. It's currently open at nakedtradingclass.com. You don't have to put in your email or get spammed or anything like that. All you got to do, go there, download the cheat sheet, which is underneath that video, and play it at your leisure. At your leisure. My Australian accent's not there yet. Anyway, so fear and greed in the markets. Why is this important? Why am I talking about this? Let me ask you a quick question. Let's say that you are the central banker for your country, whatever bank that is, and you decide we're gonna give everyone gets $10,000. We'll give everyone $10,000. Now, what would happen to the stuff that people want? Do you think the prices of the stuff would go up, or would they go down, or stay the same? The answer is probably they would go up. The prices of the stuff would go up because people know, the people selling stuff know, hey, all these people are going to come in here and start buying my stuff, so I need to raise the prices. Might as well. I'm going to sell them out anyway. Everyone's got $10,000. They got money in their pockets ready to burn it, right? So let's do it. Let's raise the prices. Now, another question. Why is this happening? If you're the central banker, you give everyone $10,000. Why? By the way, that's exactly what happened in Australia. They gave everyone $10,000 if they wanted to buy their first house, right? So what do you think happened to the price of the houses? They went up. They went up. Surprise, surprise, they went up. So why does this happen? Why is it that people, when they have access to more capital, more money, they want more? They want more. They want more even when they don't have capital, when they don't have an extra $10,000 to burn. Well, this is obviously greed, right? And when they don't have money, or it's difficult to get money, they get fearful. So you and I both know as traders, this is what makes the markets go. Fear and greed. Fear and greed. It's always fear and greed. You can even get I'll show you in a minute some tools that you can use to assess fear and greed. But here are three things that you can do to assess it in yourself. Number one is test yourself for greed by recording on your trades. And you can do this at every time you check your charts, for example. Let's say you trade the daily charts. So your trades might take on average 5 to 8 days to close out. So every time you check the charts, you might check the charts 2 or 3 times a day. You can record in your journal, what's the likelihood that I think this trade is going to work out? 1 being going to get stopped out, it's definitely not going to work out. Or 10 being, yeah, I'm definitely going to make some good money on this one. Okay? And what you'll find is that the fear is at the highest right about where the turning point is. And the greed is at the highest right about where the turning point is. In other words, when we get most greedy is when the markets usually go against us. And when we get most fearful is when the markets usually turn and start going in our favor, in our direction. That's very common. I'll show you a trick in just a moment, how you can do this and demonstrate this in yourself and in other people. The other thing that you can do is you can write down the number of pips you think your trade's going to make. Do you think your trade's going to make a whole lot of pips, or do you think it's not going to make a lot of pips? Why is this important? Why is this something that you should look at? Why? Because it's a proxy for your confidence in the trade. If you're really confident in your trade, what are you going to do? You're going to say, I'm going to make 600 pips on this trade, no problem. If you're not confident, what are you going to say? I'm going to lose 100 pips. It's going to hit my stop, or whatever your stop loss level is. So again, that is a way to rank it. And I have a friend, he would train traders to trade for him. And you know what he would do? He would actually plot like a moving average, a 10 simple moving average and a 20 simple moving average of their trade results. And when it crossed over, he would start giving them less money to trade. So he would restrict how much access they had to his fund, and their trade size would be reduced as soon as it crossed over. In other words, they got really confident, and their trades started losing money. He wanted to make sure that they weren't risking too much. They actually couldn't set the risk amount. That was all done by default by the platform that he had programmed. But anyways, the important point to note here is that we can use our confidence ratings, likelihood of a trade working out on a scale of 1 to 10, or number of pips you're going to make, or amount of money you're going to make, or whatever, to figure out how fearful and how greedy you are. You can also use the charts, which I'm going to show you in a minute, or you can use any number of proxies on the internet. So let me dig into that right now. The other thing I want to just quickly point out, though, this is number 3, is that social proof is a big deal for traders. Social proof is what was going around the internet when everyone was buying Bitcoin at $10,000, $11,000, $15,000, $16,000, $17,000, $18,000 a coin. That was social proof. Hey, they're making money. If it's good for so-and-so, it's good for me. I'm going to do it. That's social proof. You have to be wary of social proof. If you find yourself saying, well, it's working for them, so why don't I get in on it? That's definitely a sign that there's some greed in the market. And the other side of that is also true, the fear side. So let me share with you how you can use this in your own trading. I'll show you how to do this on the chart. So what I've got here is a 1 minute euro chart. And what you do is you wait for the market, like the market's going up, right? And you go, okay, I've done this in live webinars. I say the market's going up here. When are you sure that we should buy? And what will almost always happen is people go, you know what? I think we should buy right here, right there. And then what happens almost immediately? This is the 1 minute chart, so it's easy to get immediate feedback. Boom, it goes down. Same thing here. Okay, when do you think that I should buy here? Oh, buy right here. It's definitely in an uptrend now. It's just consolidating. It's going to break out and keep going. Boom, went down. So this is very, very common. Right now, you might say, what do you think? Do you think we should sell here? Do you think the market's going to go down? Yes, should sell here. It's probably going to turn around. So you can use the crowd as a proxy. Obviously, I've told you in other videos, you can use the open position ratio. Traders, when they're in Forex, when we see a strong trend, traders, by and large, will trade against that trend. So right now, I'm long the Swissy, for example. Why am I long the Swissy? Because like 80% of the traders are shorting it. So I'm long USD against the Swissy. These are the sorts of things that you can use to take advantage of the fact that the crowd is always swinging between fear and greed. Here's another one. You can use the CNN Fear and Greed Index. I don't know have you ever seen this before? This is pretty cool, actually. See if I can find it for you here. Fear and Greed Index is right here. Fear and Greed Index, right now you can see it's a little bit on greed, but when it gets to the extreme greed, extreme fear, that's when you want to look out for potential trades. You can look at the sentiment in the market at FX Street, or you can just Google open Forex open positions or open position ratio, and you'll see here here's the Forex Central or whatever, FX Street, Saxo has one, Awanda, all of these websites here. All you have to do is just take a look at where everyone's at. Where is everyone piled in on one side? Well, I want to be on the other because that's where the trends are. So as I'm recording this, and this is going to change, obviously, it changes every day or every 10 minutes or so. As I'm recording this, you can see here that a lot of people are this is trend. This is a trend thing here. A lot of people are buying the Aussie. A lot of people are buying the New Zealand dollar. So these are in downtrends, right? Sorry, a lot of people are buying. 89% are buying the Kiwi. 91% are buying the Aussie. So these are in downtrend. I'm actually short the Aussie too. I'm short the Aussie. So I'm in the 9% here. I don't know if you can see this. I'll have to zoom in. But the idea here is that it is possible to assess if you are in fear or greed mode. It is possible to see what other traders are doing in terms of fear and greed. And fear and greed drive the market. People get exceptionally greedy and start counting their money when they're in a good trade, when the market's going in their favor, and they get exceptionally fearful when the market goes against them. That's why, of course, have you ever had that situation where you were in a trade and you're like, oh, this is just not working. You dump the trade and then boom, it turns around right after you do that. Super frustrating, right? Well, this is why that happens. This is exactly why that happens. If you want to learn more about building up a small account quickly, you can go to nakedtradingclass.com. Click that link above or below this video, or just type it in nakedtradingclass.com. We'll show you 3 different ways that you can grow an account quickly, and you can download the cheat sheet so that, and fill that out when you go through the class. That make sure that you get the most out of it. Okay. We'll see you in another video, and I wish you happy trading. Bye.